Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rafi Bajan, currency analyst, and today is Monday, October the 2nd, 2017. Today we will look at the dollar yen, the euro dollar, the pound dollar, and the dollar loonie pairs. Let's begin first with the dollar yen pair, and we can see that USDJPY has managed to maintain its bullish structure in the short to medium term. We can see the 20-day moving average is continuing to trend upwards, and the MACD is also continuing to rise and is above its red signal line. However, we are seeing some resistance around the 113 handle, which is the 78.6% Fibonacci retracement of the down leg from 114.49 to 107.31. You can also see the stochastics are showing a fairly neutral momentum, and although prices have managed to spike up the 113 level, they haven't managed to close above it. So without a sustained rise above 113 level, we could see the short-term bias shifting to a more bearish one. To the downside, support should come from the 200-day moving average at just below the 112 level, and below that we have the 61.8% Fibonacci at 111.75 and the 110.90 at the 50% Fibonacci level, followed by the 110 and 109 handles. Let's move on to Euro USD now. We can see that we are possibly seeing a trend reversal following the formation of a double top. We had that double top confirmed after prices broke below the 1.1822 level. So we are seeing continued deterioration in the short-term bias. We can see the RSI has been making lower tops, and the MACD has now also just turned negative. So the bullish uptrend is in the medium term is now at risk of reversing to downtrend, and in the short term we are already seeing downside momentum. Support to the downside, the key support to watch for is the 1.1655 level, followed by the 1.1386 level. To the upside, we would likely see resistance coming from the 1.18, 1.19, and 1.20 handles before prices manage to re-challenge the 1.2092 level, which was the 2.5-year high at the start of the month. Moving on to pound dollar now, we can see we are seeing a downside correction, although overall the uptrend is still intact. We can see the pound has been making higher tops against the dollar, although prices have now dropped below the key 1.33 level, and we are seeing the RSI heading to negative territory. The MACD, although it's still in bullish area above zero, it has crossed below the red signal line. So to the downside, support should come from the 1.3215 area, followed by the 1.31. The 1.31 area should be major support to watch because it is a 61.8% Fibonacci retracement of the up leg from 1.2773 to 1.3656, and is also where the 50-day moving average is currently converging. A drop below the 1.2773 level would possibly put into question the current uptrend, whereas a break above 1.3656 would mean a resumption of the Trump uptrend, with the next key resistance areas to watch for being the 1.37 level and the 1.4055 level. And finally, let's look at USDCAD. We can see we did have a more than 2-year low 1.2060 back at the beginning of September. We are seeing an upside correction now to that downtrend. Prices have managed to climb above the 50-day moving average, but they are now finding resistance at the 61.8% Fibonacci retracement of the down leg from 1.2777 to 1.2060. So there is a strong resistance around the 1.25 handle. If prices are unable to break above that level, we could possibly see prices heading back down again and possibly resuming the downtrend, although near-term momentum is to the upside. RSI is still climbing and hasn't yet reached the 70 overbought level, so there is still room for additional gains in the near term, and we are also seeing a weakening of the medium-term bearishness. We can see prices are approaching the Ichimoku cloud. They're not that far away from the bottom of the cloud. So the top of the cloud will likely act as resistance at around the 1.2625 level, which is the 78.6% Fibonacci level, and a break above 1.2770 would possibly signal a trend reversal or at least an end to the downtrend. Whereas to the downside, we should see support coming from the 50% Fibonacci level at around 1.2420, followed by the 38.2% Fibonacci at 1.2335. That's it from me. Thank you very much for watching and have a great day.